Good morning, everyone, and welcome to the European crossover webinar. And we have seen a pretty good pullback or sharp rebound here in equity indices from the lows that they were at after they fell down to 3,000 and essentially touched the 200-day moving average here at 3,004. Seen this here in S&Ps. Now we've actually rolled over into the September, but it's going to be a lot easier for me until I get all these levels updated to reference the June S&Ps, which are trading right now at 30.43. September S&Ps are trading about almost about 10 handles different. Actually now just about 11 handles different, but once again easier to reference. The June contract, whether it be the S&Ps here, the Dow futures, or the NASDAQ. But we did see those falls. And if you remember a couple of days ago, prior to even the NFP, I had shared and talked about here on the Russell, where there was a large option transaction that, and even shared that in the chat room, was that they had bought a lot of puts and finance that in part by selling out of the money calls, and they're looking for a 6% drop, and sure enough we got that and then some. I mentioned in there that they were looking for a move by the end of next Friday, and obviously this all transpired so quickly, far faster. I think I did not see that coming off that far that fast. When we first initially sold off after FOMC, thought we may, at least when it comes to the S&Ps, pull back a little bit up here. Remember working order, I think it was 31.85, and I think the highest the market ever got to was, I think, 30.79. And then, of course, the rest is history. We sold off, but there was just no bids. I mean, we just, there was no bounce. It just kept, like I said, just kept sliding, various levels coming into, and boy, did we really, take a pretty sustained fall. You can see that. And it's just, really, there was nothing to suggest, even in FOMC day, we had already run up. We did have a little bit, but here, and you could say shooting star, but not at this level because it wasn't at the height. So we just closed lower, and then you can see that, we came back up and we opened up, tried to challenge a little bit, immediately dipped, and then you can see here, there never was a real, bounce in here that one could go on and say, okay, you can even see here, you have a little bit of a hammer, and instead of a follow through, we just turn around and roll over, and roll over, and roll over, and there just was no give back. So we've made a rally back up here towards the 30.54 area. Saw a little bit of a bounce, a little bit of a dip back from that area here, 30.54. But once again, we'll see what happens here. But the market, like I said, has come back to a certain extent, but certainly nothing to the extent that we saw this sell off. I mean, with an equitable pullback, maybe back up here to at least 30.73 or 30.86. I mean, we've seen a little bit of a bounce back, really not a bad bounce back, considering, from they continue to go in and sell off after the cash close. And you can see corresponding moves here in the NASDAQ. Obviously, I mentioned the Russell, and of course into the S&Ps. All of them are essentially the same type of move here. You can see here, here, here. Just no, a little bit of a bounce because the Russell had been, not Russell, but the NASDAQ had been doing its own divergence, but it was not enough to help out any of these other indices, and certainly the Russell sold off in its own magnitude. Looking at the data that's come out, we did have earlier UK GDP as well as industrial output, manufacturing output. Those all came in much earlier, 2 hours ago. So I'm not going to spend any time on that. We did have French CPI, once again, well over an hour ago, as well as Spanish CPI. And then what we have coming up is going to be Eurozone industrial production. And then as we come into the States, there'll be import-export prices. with Canadian capacity utilization. Now, a little bit later on at 10 a.m. Eastern, we will have University of Michigan sentiment and expectations. They're looking for 80%. Actually, that was for Canadian capacity utilization, but they're on the University of Michigan, they're looking for 75. Now, part of the reason that was attributed to the sell-off was because potential for COVID to go in and pop right back up again. And we've seen some hot areas here in Arizona, as well as Texas, and to also Florida. That's also was a concern. And then, like I said, we did go in and sell off, and despite the Fed saying that they're not even thinking about raising rates, it certainly made no difference whatsoever. And Bank of Japan looking to extend its corporate support program, just coming over the wires. But as I said, you can see we've had pretty good rebound here. Once again, I'm looking at the June as opposed to right now. The front month is now the September, but much easier to go and make comparisons here, referencing the June. And we'll take a look at the news. Euro rises and risky currencies recover as traders stop cashing in profits. The euro edged up slightly against the US dollar on Friday, not far from the 3-month high it rose earlier in the week, as traders paused from cashing in latest profits. During the Asian trading session, the Australian dollar and other risk-sensitive currencies gave up ground before recovering and trading higher against a safe haven greenback, following a rise in European stocks. Investors had earlier decided to unwind their positions after a rapid buildup of bets on risk assets that had taken off of hopes for the reopening of the economies of many countries. As long as the governments around the globe continue to ease their lockdown measures, and as long as economic data continues to point that the deep economic wounds due to the coronavirus are behind us, we would treat the retreat as a corrective phase of the broader recovery. We will still see decent chances for equities and other risk-linked assets to rebound again, and for safe havens to come under renewed selling pressure, said Pisuros. Okay, yeah, the Bank of Japan is expected to enhance its corporate support program by 100 trillion yen, is what they're stating. Euro rose to 13.15, staying close to the 14.22 3-month high. It reached. Aussie rose to 68.81. Elsewhere, the British pound remained unfazed by the fact that the British economy shrank by a record 20.4% in April for March, as the country spent the month in a tight coronavirus lockdown. And the morning bid reality check. A week appears is as long a time in the world of financial markets. Hopes for a swift economic recovery propelled by massive money and fiscal stimulus have been replaced by the fears of a resurgence of the coronavirus infections, wiping $3 trillion off the value of world stock markets. And so the day after the night before, when all the three major U.S. indices lost well over 5%, posting a worst one-day percentage drop since mid-March. Asian shares have slumped more than 1%. Oil prices are down more than 2%. And the Chinese yuan is heading for its biggest daily decline in 2 weeks, in a further sign of investors' risk-averse mood. Europe's main markets have opened 1% lower, although U.S. stock futures suggest a rebound for Wall Street later on. Still just a week after markets globally were riding high on the upbeat U.S. jobs data, a heavy dose of fear is back after rallying hard since mid-May. Markets are now facing a reality check over the prospects of a V-shaped recovery. CBO Volatility Index, a barometer of investor anxiety, on Thursday posted its largest one-day point gain since March 16. The S&P 500, Europe's stock 600 index, and the World Equity Index are all down around 6% this week. They're on track for their biggest weekly drop since March, when the coronavirus-induced lockdowns sparked panic across markets. The pandemic is once again the source of the unease. The new infections of coronavirus in the U.S. are rising after 5 weeks of decline, according to a Reuters analysis. Economic data remain poor. British economy shrank by a record 20.4% in April from March as the country spent the month in a tight lockdown. The cyclical segments of the European markets are on the front line this morning, with banks, autos, travel, and leisure under pressure, along with oil and gas. Among stocks under the spotlight is Ryanair, after CEO Michael Leary says the company is likely to book a net loss of 200 to 300 million euros for the fiscal year. Teleperformance will replace Sodexo in France, CAC 140. Let's see. Wednesday's sobering economic outlook from the U.S. Federal Reserve has not helped the mood, with Fed Chair Powell warning of a long road to recovery. Unsurprisingly, traders have resumed betting the Fed funds rate will fall below zero. The U.S. 10-year yield, which a week ago looked set to test 1%, is back down to 0.7. In Europe, Germany's benchmark 10-year yield has tumbled 15 basis points this week and set for its biggest weekly drop since February. So with that, we'll go and move into our analysis. Marx is coming back from back-to-back Zoom meetings. What's your view on the Dow for today? It's, and we'll go back to that, Mark, one moment. I mean, we're seeing a dramatic, I don't want to say dramatic. Like I said, it's a pretty decent pullback, a snapback, I should say. But, I mean, and I'm looking at the June Dow futures now. Like I said, everything's rolled into the September. But like I said, I haven't had a chance to update corresponding levels. Now, like I told you, when you look at, let's take a look at here at just make it simple with the S&Ps. So you can see the September S&P is trading at 30.50, yet that's the June S&P, and the September's trading at 30.38. So you can see there's about 11 handle difference here. So that's why I've kept the June in here. I think it's easier for me to reference at this point. Well, you were asking about the Dow, and like I said, we have had a pretty decent little rebound, but I probably wouldn't expect it to get too far, and this is on a 2-hour chart, past this 25,752, or at least expect them to have some trouble at that point. We can kind of take a look at what a fib retracement would be on that. Well, a 23% will come in at 25,606. And we're looking at 25,752. Now, once again, like I said, the sell-off was, needless to say, was dramatic. And we can certainly get a bounce back, because a couple of things you would look at. For one thing, the move, we really never saw a bounce at all. You see what I'm saying? It was just down, 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 down. You can see here, we even had a hammer bottom right in here. It did come off here, and I myself talked about coming in at 26.034. I did not come in. I actually, when we got there, it doesn't look as clear, but we'd actually kind of held, and then we dipped back below it. I'll pull this up. And I'd even talked about it. I said, boy, it'd be great if you can get down to 26.034. It kind of held a little bit and then it ticked back down here, but other indices were selling off the time. But you can see we saw a nice dramatic pullback. So that's a hammer bottom, and that's on a 2-hour chart. So it's not like as if we're looking at a 5-minute, 15-minute, or even a 30-minute. But look, immediately, although this came, I think we came into well, actually, after it was already selling off, well into, as we rolled into, I don't even know if this was coming into the cash open. Let's see, sure enough, it was into that cash open. That's where we saw that dip. But my point being is we get this and you're thinking, okay, well, at the very least, though, maybe get a little bit of a bounce from here, or we'll try and defend it here and see if we can kind of make a stand. And we just rolled over. We just kept going south of the border, just down, 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 down. And like I said, there were different markets where there were, whether it's the S&Ps or Russell, that you would see this. I mean, I saw one big notable trader. I don't remember what level it was, but he was like, kind of making a reference that he got lucky on a fill. He was getting long, and the market just kept going lower and lower and lower and lower and lower. And so my point was, we never even saw a bounce here. So I think that the ability for the market to come back, I think we have a decent chance that we could easily come up to this 25,752 and probably exceed it a little bit. But I'm not expecting anything dramatic. I mean, after a pullback like that, anybody that's short, think of it this way: if you're short or you're looking to add on any shorts, well, you're not going to come in and say, okay, now I'm ready to short. Unless you're scalping, you're going to say, let me make a move back up to 26.034, and then I'll probably come in and I'll short some there, or maybe just right underneath it, right before it gets there, I'll short it, and I'll add some more if it gets here or there. So that's what I'm saying is I think we're open to seeing some decent bounces. And one of the reasons I'm thinking we're open to seeing some decent bounces is for the reason that, as detailed, is we didn't even see a bounce. I mean, look at this. It was just down, 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 down. I mean, even when you saw a little bit here, they whacked it so fast it wasn't even funny. So you whacked it here and you're thinking, okay, good. Now we've got a nice hammered bottom. And I myself talked about this. I guess it gets spooked as we came into the cash equity opening. There was pressure there. But I'm saying is, look at this bounce back. And you're thinking, okay, now we'll try and see if we can work a little bit higher. And wham, we got knocked down, and you can see here there never was a pullback at all. I mean, you can see this come a little bit off the lows, and at least just talking about the S&Ps on the way down, it would just be like you would look at certain levels and they would hold, but your rally would only be like about 6 or 7 handles. I think that the one that got the best move was probably, I think it was Chi, who got long at, I think it was 30.49. Yeah. I think the market might have rallied 11 handles, I think. And that was already dramatically oversold at the time. And then it turned around and rolled over and just obviously took that low and just kept on going. So that's my take on that. He says, thanks. Is it dead cat bounce or risk on again? No, I would say a dead cat bounce, Mark. That's what I'm saying is that what someone was asking me in the room in the afternoon, it was later in the afternoon. We probably had like another hour to go or something like that. And they said, hey, I know you just really scalp, but are you looking for a further weakness? And I would think so. Let's look at the daily on here. You see, we've already come off. We still have a long ways that we can go. I don't think we're just going all the way back to the lows or anything like that. So you can see when you look at it like, wow, that's a pretty big move on a daily. Exactly. It's such a big move that look how much it cleaned out a lot of people here. So the thing is you would expect to get, like you said, a dead cat bounce. Perfect examples. Look at the 200-day moving average. Maybe we'd make a run, not all the way back there, but make a move, close somewhere in here. So one of the things you want to do is put yourself in the other person's shoes. So if you're saying, wow, I really think we're going to go back low. I think we're going to go back down to 23,777. Then, and I was short and I covered my shorts and I'm ready to sell again. Well, you're probably thinking, well, I'm not going to sell here. I'll wait till we get up here closer to 26,000. And if it goes a little bit higher, I'll add some more at wherever. My point being is, so other people are going to be thinking the same thing. They're like, wow, this market was so overdone. And like I told you, there was never a bounce. So my thinking is that you can really, it was never a bounce in the sense that we were able to successfully defend yesterday and say, oh yeah, had a pretty good bounce there, and then we rolled back over. So all these people are just down, 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 down. So my guess is you can probably get a decent little snapback. Do I think it's going to be hold going forward? No, I don't think so. I think that we'll be doing some backing and filling, and eventually we'll probably challenge the lows right here. I mean, we may go up to here. I'm just using an example to 26,000, and then we did back a little bit. We challenged 26, and then we start eventually rolling back over the course of days or a week and a half, 2 weeks, and then we probably challenge the 25,000 again to clean that and see how many stops we are, and then we'll see what happens. So, but I think for today, I don't think it's a matter of risk on. I just think that the market got so overdone that you're going to see a snapback because people that are willing to reshort it, they're like, well, I'm not going to short it here. I'll wait till we get closer to 26. So hope that kind of answers that. Yeah, I mean, you're saying we've rallied 400 handles already, if you're looking at about the Dow, but look how far we fell. You see, and my take is you're right, we've come a long way, but look how far we fell. And there was never a bounce. You see what I'm saying? It was just down, 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 down. Even here, the one place here that I'm telling you about, right there. There was right there, you could say, oh, that's a hammer bottom. And what happened? It immediately broke. I mean, there wasn't even like, well, it kind of rallied a little bit, and then they kind of folded over. So that's what I'm saying is we can still come back because – once again, I've got to put yourself in the other person's shoes. If they're thinking, well, I'm willing to short it, but I'm not going to short it here. I'll wait till at least we get to 752, or I'm going to wait. Well, not me. I'm going to wait till we get to about 825. Oh, okay. So that's what I'm saying. That's the propensity for this to still rally further. Doesn't mean that on a very short-term basis, we can't run into some resistance right there and then pull back, which we did here. And I wasn't awake at this time, so I'm not sure what transpired on that first move, and then we came back, and now we are challenging. Doesn't mean we can't pull back here, but as we get into the U.S. session, and we're also coming into a Friday, you'll probably see a lot of dancing around here, and just be wary is that you want to come in at good levels because and you probably have to use wider stops too because we're probably going to see a lot of herky-jerking around. So anyway, let's go and move on to the analysis. When you get a big move like that, not trying to dance around the picture, you get such a huge move. It's not, I don't want to say easy. It's not, but I was going to say, it's not easy just to say, oh, we'll probably go to this level and that level. When you're trading, like I said, I'm using the S&Ps, you've been trading let's say a 45 handle range. You'll say, okay, well, if it gets up to this level, we'll probably see a little bit of a sell-up, blah, blah. But when you fall as far as we have, whether you look at the S&Ps or in your case, the Dow, you see these levels. I mean, you can see how they fell through all these levels yesterday. And I saw some very, very good notable traders, decent-sized traders. They were picking this stuff up on the way down. Now, they didn't get, run over like they got horribly tore up, but they came in at good levels. And as I showed you, those levels, they just weren't holding. You see what I'm saying? Several notable traders. Another notable trader I saw yesterday who's a very good index trader, and we were coming to the last hour, and he goes, I'm done. He made a joke about don't break the market because I'm done for the day. And that person had come in. That person came in on the S&Ps at 3064. That's what he said, 3064. Well, you can remember we quit, and I think it was Ranscock was saying, I was talking with them. They were saying, hey, we're looking at maybe 3060. That was on the way down. We went down there to 30.49. I mean, that's what I'm saying. Then we rallied a little bit. I think Chi had gotten long. We rallied up to, I think, 30.61, and then boom, we rolled all the way back down, and then we were at 30.38. That's what I'm saying. So, these big moves, you can't just say, oh, we're probably going to stop here. We're probably going to go just there. I think when you see big moves like that, you can expect big rebounds. Doesn't mean they're going to stick, but I'm just saying you just want to take that into consideration and look for levels for the market can stretch, and make sure that you use appropriate stops. So anyway, we're now on the make sure on the correct page. Yeah, Mark, there's just not, and like I said, that's what I'm trying to give you the best take. If I would, like I said, I'm gonna be a straight shooter with you. I'm not gonna, sell you a bunch of malarkey or whatever like that. If I don't know, I'll just tell you I don't know. But in a situation like this, when you see these big, massive bounces, I'll give you a perfect example here. Let me go over here. Remember the bounces we were seeing here in the euro odd? Look at this. I mean, these are like wide bounces, like here, look, within this one day, 8,100 to 500 pip move in one session. You see what I'm saying? But you can see here, we got to extremes, but look, those are the extremes we run to. That's what I'm saying. So now things have quieted down, and euro odd usually moves pretty good. But I'm just saying is when you get in these type of markets, where you're getting all this volatility, look at the swings. I mean, yes, I don't want to use this one because this one's just like crazy. What is this, 1,000 pip move? But I'm just saying, look at these moves here. Even here, look at that. You're talking 300 pip. I mean, not that that isn't unusual that they can move that, but look at even here as markets were quieting down, you were still seeing big moves, and they were up and down and up and down. You see what I'm saying? So that's what you want to take into consideration, is to say, you get a big move and go, okay, well, where's it going to stop now? Look, and you get these wild moves with wild volatility, the markets are going to swing back and forth in a wide pendulum. But anyway, let's go and move on to the analysis. So anyway, I hope that was helpful. But generally, yeah, you want to look at, you don't want to come in, you kind of want to say, if it gets to this level, let me see the reaction. So I definitely wouldn't be saying, if it gets to 25,603, boom, I'm laying my flag in the ground. You can, but you're probably better yet to say, let me see how it reacts. And if it looks like it's kind of holding, then you can say, okay, now I'll step in short. But anyway, let's go on and get into the analysis. That was helpful. Yeah, I can tell you what is, I'm pulling up the thing. I made money. I mean, I guess I should be happy that I made money. I didn't break the bank like some of y'all did that were just short and were looking for big moves. That move yesterday just really surprised me. I mean, I thought we were going to go lower, but I didn't see anything like that on the horizon happening. I had mentioned in the chat room, and I talked about the Russell, and I haven't been even following the Russell, but I thought, oh, that's a pretty good, the market's get whether it's the NAS, or not forget the NAS, but whether it's the Dow or the S&Ps, it's going to have a hard time not correcting if this Russell ends up falling 6%, which is but they were looking for a 6% move over a week. It did this. The guy got short, or the firm did, and they got the 6% move by the next day. How about that? You see what I'm saying? So I did not see that happening. And the thing is, my forte is when we're trading back and forth markets. They're rotating back and forth. Yesterday was just a one-way market. That's it. I mean, I got some trades. I'm not going to say I didn't make money. I made money, but it wasn't like I had some, bang up day or anything like that. I mean, I just did not see. It was, for one thing, it was a one-way market, and we weren't even holding levels, and I did not see us falling apart like that. There's no way I would have seen it. I would have thought that we were going to hold. So just one of those days. But anyway, moving into the euro. Move this out of the way. The euro paired back on Thursday amidst the decline in equity. Support on Friday will be 12.58 with resistance at 13.36. So 12.58. Keeping it pretty simple here. I mean, we've already had a big move. There's no thing going into details about, oh, this is the reason. We all know what the reason was. It was a massive sell-off in equities. They got the dollar, on the bid, and the other currencies pulling back. So all we're doing right now is just saying, here's support and here's resistance. So going to the cable sold off on Thursday into the weekly level of 2602. You saw a big, huge level. Support on Friday will be 2521 with resistance at 2664. Once again, a wide range because that's what we're seeing here in equities. So 2521, 2664. Still bullish. Moving into the Aussie. Aussie saw a dramatic decline on Thursday with the equity sell-off. Support on Friday will be 67.87 with resistance at 69.33. There's no, like I said, it's no need to go into, really just throwing up the resistance and support because we've already gone into detail and we already know that equities have been driving the bus for a long time. And the whole reason why we got this craziness is, that with these Robinhood traders, that we're pushing that momentum, and that's why these equities markets stayed so big for so long. And then when it did come apart, it was like a freaking house of cards. I mean, it really fell apart. When it fell apart, it fell hard. I thought we would come down, but I didn't think we would come down like that all in one day. There's no way. I mean, I just did not even see that happening. I thought that we would see a pretty good sell-off, and I thought that the person or firm that got long, bought all those Russell puts looking for a 6% move within 1 week, I thought they were spot on. But once again, if this was starting to develop, I wish it would have been slower because I would say, okay, I play the short side, and then it rallies back. I'm going to keep on staying short and holding for the next few days, not that it would all come apart in one day. Moving on now to the Kiwi. Kiwi sold off like its cousins with a sharp pullback. Support on Friday be 63.83. You can see right there, 63.83 with resistance at 64.93. Although I saw on yesterday one notable trader who was asking, hey, how many people are trying to fight this? They may have, trying to buy it on the way down. It came in a couple of times, but and made a few pips because, like I said, we would hold 2 ticks, I should say. We would hold, but we couldn't sustain these holds. I mean, it was wow, what a day. Moving into the dollar CAD. Dollar CAD came more back on Thursday. Resistance on Friday would be 36.98. Huge move. We're actually pairing back already. 36.98 was supported 35.18. May have given this a little bit too much credit. 35.18. Let's go into the dollar peso. Dollar peso flew on Thursday as risk came off. Resistance on Friday will be 22.85. Oh, we just took that out. And supported 22.42. We'll move into the dollar yen. Dollar yen on Thursday sell-off managed to hold 650. Well, held above 650. Support on Friday will be 629 with resistance at 760. And on to the cash dollar index. The dollar index rallied on Thursdays as equities fell hard. Resistance on Friday will be 97.14. Already seeing this stuff pair back. But like I said, remember, you're going to see these volatile moves. Now, FX, right now, the dollar index isn't as volatile as what we'd seen in the equities, although we saw a snapback. But you can see it's giving it right back up. Not a whole lot, but it's already selling back off as risk comes back on. So 97.14 and support will be 96.55. Well, we're pretty close to that. So let's go move into the cross rates. Okay, so the Kiwi yen continued to fall back. Now we're kind of making a stand here. Support is going to be 67.93. Probably not going to tag it, but we're just going to go with the levels. But you can see already pretty good sell-off here. 67.93 may be a bit of a stretch at this point. And resistance, we're going to go with the low on this day. See that? That's going to be 69.52. Moving on to the euro yen. You can see here, look, after they posted this gravestone doji, which, and boy, what a move that was. Boy, we've seen a pretty good sell-off at that point. This was a good little trade right there. I mean, for those who took it on the chart pattern itself, you know, the gravestone doji, and we'd had such a phenomenal move. And you can see the established a little bit of a hammer, and then you can see the market just roll back. But you can even see the difference I was talking about when I compared the hammers on the Dow and the hammers on the SPOOs. Now that was intraday. Remember, it was on a 2-hour chart, but this is on a daily. But you can see here they established a hammer. Now the hammer, it does end up failing. Okay, so but it wasn't like as if we were way down here. But we do establish a short-term hammer. But look, you see how they try to defend it on this one day. Now once again, we're looking at intraday. At least on intraday, you would have thought, okay, they'll at least try and defend it, and then maybe the market comes apart and for the fall through. Man, we established that hammer, and phew, we went right back down again. So that's what I'm saying. There just were no bids yesterday in equity indexes. But anyway, we come down here. We've actually taken out this level of key level right here. Looking at support. Look at this. Right. See where we can see some. You see right here a lot of touches here. Ah, that's actually where they found support, which is 2026. We'll just put 2025. In resistance, we're going to go with the low on this day, which comes in at 2182. Into the euro on. We finally kept on building. We're finally working our way up here. We had talked about this, I think it was last week, or yeah, maybe it was end of last week. The potential for 64 and then 65, and we've actually almost made it all the way to 66. That's going to be resistance 6607. And support, we'll go with this level down here, which is 63.42. Pretty wide range. And with the Euro Kiwi, once again, push a little bit higher. We haven't even taken out yesterday's highs. And I'm going to go with the low on this day, which is just actually just a hair above the day's high yesterday, which is 76.68. And support, that high right there, which is 74.40. Let's go move into the RCN. Pretty good yank down here. Support would be 72.20. And these are a little bit of extreme moves right here, so I'm not sure whether we'd make it all the way down there. That'd be support. With resistance, we can see right there, just going with the levels. 74.02, gonna be resistance. And going on to the guppy. We could pull down, you can see all this volume here. I guess we could call it a lot of liquidity, which is 33.52. And the resistance is going to be this I bar here, which is 35.75. Let's go to Sterling Odd. Right here, 84.33 is going to be, let's go with the key level. And support. Right there, actually take it just to that bar right there, that high. See the high right there? 82.52. And that wraps it up here. We have the levels in place. I'll post the chart. We'll see you in the chat room. And thanks for joining us here on the European Crossover Webinar.